Goldman Sachs has come out with their latest note where they've raised their fourth quarter 2026 price forecast by $6 per barrel to $60 a barrel. This, remember, is for the fourth quarter of calendar year 2026. But this, of course, is $10 below the current rate of $70. They've raised their forecast, but it is still below the current level at which oil is currently trading. But shifting focus, and in fact to understand more on this in greater detail, we are now joined by Mr. Mohammad Imran, research analyst at Mirae Asset Sharekhan. Mr. Imran, afternoon. Thank you so much for taking your time out and joining us here on ET Now. How do you view the
Afternoon,
entire
Shasha.
how do you view the entire dynamics around geopolitics, around Trump tariffs and its impact on the precious metals market first? Let's talk about that. That continues to see a steady uptick, silver at 87, gold at 5,200. Do you think the trajectory is likely to continue as far as the uncertainty sustains?
So, as you already said, that as far as the uncertainty remains, gold and silver are, and along with other precious metals complex, will continue to move higher. And actually, nobody knows what will be Trump's next move. And so that these are the reasons which will make gold and silver and other precious metals go on a buy for this week and for the coming upcoming weeks until we get more clarity on tariff fronts from Trump. Apart from that, we have already gold remains. In comparison, we still remains bullish on gold prices because the central bank after buying 764 tons of gold in 2025. The January data has also shown that central banks are continue to buy in 2026 as well. So we expect that even though prices are high, but the net scenario for 2026 will continue to remain that central banks will remain a net buyers.
Okay, central banks will continue to remain a net buyer of both gold and silver, and perhaps that is likely to aid precious metals up move this year as well after a staggering rally that we saw last calendar year. But let's also talk
Absolutely.
about oil, Mr. Imran, and that one has, of course, we did see a brief uptick last week on account of escalating geopolitical tensions and fears of decline in supply in the global market. Today, of course, we've seen a decline of about 1%, but it is still above that $70 per barrel mark. Where do you see oil headed in the next, say, 2 to 3 odd months?
One of the reasons that oil prices have dipped a bit lower is that there is news that US may go with a limited strike on Iran, so that's why the risk premiums have eased down. But overall, we still see that the Brent and crude WTI prices are still having $4 to $5 of risk premiums embedded in the prices, and even if the strike remains limited from US side, we don't know how much Iran would retaliate to it, and then that's why prices at WTI we still feel that prices can move up towards $78 if US and Iran goes for a limited war as well. And the latest data, if you see the shipping tracking data, if you see that we have seen that last week on week, there's a decline of floating inventories by 6% as per Vortexa. So overall, crude oil, we continue to remain bullish for short-term crude oil prices at WTI. We expect that it could move towards $68 and max. It can further go up to resistance of $70.
Okay, 68, 70, that's the outlook coming in on oil. And Mr. Imran, you're telling us that in the short term, you're bullish on oil. But if the geopolitical tensions were to settle down, say in the next few days, do you think OPEC Plus decision will again come in the limelight where supply is expected to rise gradually, at least not in the short term, but gradually over a period of time for the rest of this year?
See, as you have already mentioned that quarter four could see prices a little bit down, but from April to October remains the key demand season for crude oil, and we have already seen that U.S. Crude oil production is peaking up, and even in January there was a disruption in oil production because of the Arctic blast, and even Kazakhstan has shown some tightness, and that has led to like if you see calendar spread of Brent, it is still up 40 cents, and although it has been down from $1, but still we expect that this tightness will continue to remain in picture for the next 3 to 6 months, and OPEC still remains the key. Like they will hold the cards because even they want to gain the market share, as well as their all the economies depend on 90% of OPEC's revenue. Like their economy depend on the oil revenue. So I think they would likely to keep the market tight by going for a like pause even in next month.
Right, so all eyes will be on OPEC Plus decision. They've raised their output last year. For now, of course, for January to March 2026 period, they've maintained a pause, but all eyes will be on their decision going forward. Mr. Imran, thank you so much for taking your time out and joining us here on ET Now. But let's keep it going with